Hello and welcome to the channel. In today's video, we will be discussing the top 10 strategies for real estate investing. Real estate investing can be a lucrative and rewarding way to build wealth, but it is not without its challenges. That's why it's important to have a well thought out strategy in place before diving in. As always, make sure to like and subscribe to the channel to stay up to date on all of the latest news. Let's get started. Number 1, buy and hold. Buy and hold is a long-term strategy that involves purchasing a property and holding on to it for an extended period of time. The goal is to generate income through rent and potentially sell the property for a profit later on. This strategy can be a good option for beginner investors, as it allows you to slowly build your portfolio and generates a consistent stream of income. It's important to carefully research the local market and consider factors such as the property's location, condition, and potential for appreciation before purchasing a property for a buy and hold strategy. Number 2, flipping. Flipping involves purchasing a property, renovating it, and then reselling it for a profit. This strategy can be riskier and requires a bit more work up front, but it can also yield higher returns in a shorter amount of time. It's important to have a solid understanding of the real estate market and renovation costs before attempting to flip a property. Factors to consider include the property's location, condition, and potential for appreciation after renovations. It's also important to have a plan in place for financing the renovations and finding a buyer for the property once it is renovated. Number 3, wholesaling. Wholesaling involves finding a property that is undervalued and then finding a buyer for that property, often at a higher price. The wholesaler acts as a middleman and does not actually purchase the property themselves. This strategy can be a good way to get started in real estate investing without having to put up a lot of capital up front. It's important to have a strong understanding of the local market and be able to identify properties that are undervalued and have potential for appreciation. It's also important to have a network of buyers in place to sell the property once it has been identified. Number 4, rent to own. Rent to own, also known as lease option, involves a tenant leasing a property with the option to purchase it at a later date. The tenant typically pays a higher monthly rent and puts a portion of that rent towards a down payment on the property. This can be a good option for tenants who may not currently qualify for a mortgage but are working towards building their credit and saving for a down payment. It's important for both the tenant and the landlord to have a clear understanding of the terms of the rent to own agreement, including the purchase price, length of the lease, and terms for the down payment. Number 5, vacation rentals. Investing in vacation rentals can be a good way to generate income from a property that may not be used year-round. Popular vacation destinations, such as beach towns or ski resorts, can be good options for this type of investment. It's important to research the local market and understand the costs and responsibilities associated with managing a vacation rental, including marketing the property, managing bookings, and maintaining the property. It's also important to consider factors such as the property's location, amenities, and potential for occupancy during peak seasons. Number 6, commercial real estate. Commercial real estate refers to properties that are used for business purposes, such as office buildings or retail spaces. This type of investing can be more complex and requires a deeper understanding of the market and the specific property being purchased. However, it can also be a lucrative option with the potential for higher returns. It's important to carefully consider the property's location, potential for rental income, and potential for appreciation before purchasing a commercial property. It's also important to understand the specific needs and requirements of commercial tenants and have a plan in place for managing the property and finding tenants. Number 7, rehabbing. Rehabbing involves purchasing a property in need of repair and then fixing it up to sell or rent. This strategy can be similar to flipping, but often involves more extensive renovations. It's important to accurately assess the costs of the renovations and the potential return on investment before diving into a rehab project. It's also important to have a plan in place for financing the renovations and finding a buyer or tenant for the property once it's been renovated. Number 8, house hacking. House hacking involves purchasing a property with multiple units, such as a duplex or triplex, and living in one unit while renting out the others. This can be a good way to offset the costs of home ownership and potentially generate a profit. It's important to carefully consider the financial and logistical aspects of house hacking before diving in. Factors to consider include the property's location, condition, and potential for rental income. It's also important to understand the responsibilities of being a landlord and have a plan in place for managing the property and finding tenants. Number 9, crowdfunding. Crowdfunding allows investors to pool their money together to invest in real estate projects. This can be a good way for beginner investors to get started in real estate without having to put up a large amount of capital on their own. It's important to carefully research the crowdfunding platform and the specific investment opportunities being offered to ensure they are reputable and align with your investment goals. It's also important to understand the risks and potential returns associated with crowdfunding and have a diversified portfolio to mitigate those risks. Number 10. Landlording. Landlording involves purchasing a rental property and managing it yourself or hiring a property management company to do so. This can be a good way to generate a consistent stream of income from a rental property. It's important to carefully consider the costs and responsibilities associated with being a landlord before diving in. Factors to consider include the property's location, condition, and potential for rental income. It's also important to understand the legal and financial responsibilities of being a landlord, such as maintaining the property, finding and screening tenants, and handling evictions if necessary. Those are our top 10 strategies for real estate investing. As with any investment, it's important to do your research and understand the risks and rewards associated with each strategy. It may also be helpful to consult with a financial advisor or real estate professional before making any decisions. Thank you for watching. If you enjoyed this video, be sure to give it a thumbs up and subscribe to our channel for more great content. We hope these strategies have been helpful and have given you some ideas for your own real estate investing journey.